And okay, so crude prices fell the most in 5 months yesterday after stabilizing near $60 a barrel. What was behind the declines?
Well, in one word, it was Greece. And like most markets, the turmoil there and the impact it might have on Europe's economic stability is weighing on most markets across the board, including oil. There's also some concern about the outlook for China, and that also weighed on commodities, including nickel and copper. But prices have since stabilised today, and we've got a couple of important events coming up. Firstly, there's the US crude stockpile numbers, and they're forecast to decline by 750,000 barrels, and we're also waiting for the outcome of the Iran nuclear talks.
Yeah, Iran and world powers appear close to a nuclear deal here, but what does this mean for the oil market?
Well, on the face of it, it's bearish. It means more supply into an oversupplied market, and Iran estimates it can double its exports within 6 months of sanctions being lifted, but some forecasters aren't as optimistic as the Iranians. They seem to think that it may take as long as 12 months before Iran can increase output by as much as 500,000 barrels a day and revive ageing wells. But on the face of it, it looks like it will delay a price recovery, provided there is a deal that is agreed there in Vienna.
All right, and of course we're seeing a slump in Asia right now when it comes to China and the stock market rout that it's experiencing. Is that also having a play on investor sentiment on the price of oil?
Well, I mean, China is the second biggest consumer of oil, so naturally any slump in that market is going to have an effect on the prices there. But I mean, the immediate outlook is for Iran and those stockpile figures in the US.